So we want to welcome everyone to this webinar. Thank you very much for making time to join us on this very exciting webinar where we'll delve into agent network at the last mile in India. There's been a lot of progress when it comes to access, but little is being said of quality. And we know when it comes to financial inclusion, it's not just about access, but usage and quality. So today's discussion, we're going to look at how do we improve quality at the last mile. So to set the conversation going, we will invite the executive director of Refined, who also doubles as the director of ISSER, which is hosting Refined, to take us through the Refined Retail Finance Distribution Research Initiative. That is one of the key objectives of us being gathered today, and how you as an academia or a development person working in agent network at last mile can benefit from Refined. So Professor Peter Korte, thank you very much, and you're welcome.
Well, thank you very much, Ades, and good afternoon or good morning to you, or depending on where you are connecting from. Yumi, apologies for this technical challenge, but I believe the IT guys will work something out for you whilst we continue with the program. So I'm Peter Porter, the director of ISSER and the executive director of Refined. I want to start. I believe somebody is controlling the projection. Yes. So retail finance distribution is a Bill and Melinda Gates Foundation funded project, which is hosted under the Institute of Statistical, Social Economic Research. ISSER is a semi-autonomous body established in 1961 under the College of Humanities, University of Ghana. I will share a very brief brief information about ISSER and then talk about a Refined. So basically, we are a research community with 27 faculty, 4 adjunct visiting scholars. We have 20 plus research, actually 55 projects ongoing. We have annual publications, and we have about 9 policy briefs. We have over 60 admin and support staff as well. We have training programs in masters, that is MA and PhD programs. Currently, we have 37 PhD students. We also organize short courses, monitoring evaluation, research methodology, and project cycle management. In terms of Refined, our key focus, and then policy, we also have grants and we have 22 plus policy events. We have online seminars. As I mentioned, we have about 55 projects, and we have an annual grant of about $4 million, grant income for about $4 million. Next slide. In terms of Refined, the retail finance distribution network, we provide sub-awards to improve the last mile access to quality agent services in low and middle income countries. We have so far funded 17 institutions to undertake research, and as well as provide commercial solutions, which all aims to improve access to digital financial services among the poor and the vulnerable, especially. What do we aim to achieve as Refined? Next slide. We basically aim to deepen digital financial inclusion among the vulnerable and excluded, particularly women, poor households, small and medium enterprises, and other retail businesses. So we do this by expanding the agent network through public policy and commercial solutions. We also try to relax the constraints limiting agent network globally, and that's our main aim. We have an operational structure. We have a management committee, we have a policy committee, we have a scientific committee, and then we have project staff. So when people apply for sub-awards, we go through rigorous systems to ensure that we select those with the best of quality. Our approach is basically catalyze collaborations, experiment with practical solutions, support high-impact research projects, and support the dissemination of research insights. There are some key research focus areas, and as I mentioned, supply-side interventions are critical to us, broader market level implications, impact assessment, impact of supply-side interventions, commercial policy and academic relevance is key to all the research we try to fund. And then we want to understand the impact of competition. And to accomplish all of this, we are looking for strong partnerships between academia, policymakers, commercial providers that will conceive and implement mutually relevant research questions. In terms of agent banking, we cover the organizational structure or digital financial services, the retail end, vendor incentives, constraints that limit the expansion, impact of policy, relevant regulations, and then women's access to digital financial services. Next. The focus of this webinar is part of our information session to raise awareness about our RFP 3. We aim to foster understanding of the main issues and the major obstacles that hinder agent service provision in the last mile. We encourage academic institutions and commercial players to conduct research that will improve the agent service provision at the last mile. So for RSP 3, it is open to all those interested in research, especially institutions, or benefit from research on agent network. So we are looking at research institutions, agent network commercial providers, industry associations, policymakers, development organizations, etc. And the project must be based in low and middle income countries in Sub-Saharan Africa, Southeast Asia, and South Asia. The call is open from March 25th and will end on May 17th. And to apply, we encourage you to visit our website, refined.isser.edu.gh. And then you click on application open on the landing page, and you are quick to go. These are the subcategories of awards we give. For proposal development, we give $5,000. For pilot projects, we give $40,000 to $60,000. And for natural experiments, we provide grants between $40,000 to $60,000. Then for extensions, that is, if you have a baseline, midline, you want to do end-line data collection, we can give you $100,000 to $125,000. Then for greenfield evaluations, that's a big project where you apply RCTs, etc. We would then be able to give you $250,000 to $450,000. Next slide. Our interventions for commercial providers is those who design innovative interventions to extend agent network to hard-to-reach communities, develop evidence to undertake research to inform the design and rollout of service product innovation, test innovations on pilot or experimental basis, as well as to purchase technologies that will facilitate rollout of agent networks. We'd also facilitate partnership between service providers to advance the agent network to the last mile. And last but not the least is we undertake specialized training to build capacity of field staff to advance agent network. So we encourage people to apply in terms of RF2 P2. When we issued this in February 2023, we had 84 applications received. We shortlisted 17 for external review, 9 submitted for scientific review, and a total of 6 projects were approved. We give comments to the rest to revise and resubmit. Next slide. So far, these are the location applications received so far in terms of their geographical location. You see about the bulk of them in Africa, very few in Asia, about 4 in Asia. So that is why we are here. We want to encourage you to apply. Next. So that's a location of awards as well. Same picture. Next. So by location, where the actual research is taking place. Some researchers are based in US, UK, etc. But where the activity is what we term the location. And the density here tells us the location of researchers, not the researchers. So you find Ghana, Nigeria, USA, Indonesia, India, Kenya, Uganda, etc. Next slide. I'll be winding up shortly. So in terms of research implementation, we have 13 being implemented in Sub-Saharan Africa, 3 in South Asia, 1 in Southeast Asia. Then in terms of location of PIs, 34 in Sub-Saharan Africa, 2 in Southeast Asia, 7 in Europe, and then 16 in USA, 1 in Australia. So you can see more are located in Sub-Saharan Africa and the USA, then followed by Europe. Next slide. So location of projects in terms of country specifics. 8 in Ghana, 1 in Indonesia, 1 in Bangladesh, 1 in Kenya, 2 Uganda, 1 Nigeria, 2 in India, 1 in Sierra Leone. The PIs, you find the location of all the PIs. And then in terms of gender, we have a number of males, 45, that is 65% males, 35% females. We strive to achieve gender parity. So on that note, this is just a gist of what Refine stands for, and we encourage you to apply. I'm happy to tell you that the next presentation is being funded by Refined, and I encourage you to listen attentively and enjoy the rest of the sessions. Thank you very much.
Thank you very much, Professor Korte, for taking us through Refined. And I think the key points coming out of your presentation is we want to see more applications coming from Asia. We want to see a lot of applications coming from India. So we encourage you to put in your application, and also want to see more female PIs also applying. So now that we have set the conversation going, can we have everyone switch on your camera for a group photo? Let's have a family photo. Kindly switch on your camera for a group photo. And give us your best smile. Great. Marianne, let us know when you are okay with the group photo. Thank you. Great. Are we done with the group photo, please?
Please, a minute. Yes, Ades, we are done. Thank you very much, everyone.
Thank you very much for giving us your best smile. So we'll move on with the webinar. So it's time for us to delve into the conversation on financial services at the last mile. And as Professor Peter Korte said, it's really an honor and a really exciting one to introduce a Refined research project. Looking at female banking agents and insights from a pilot on last mile challenges for financial inclusion. Professor Gaurav, thank you. It's very early at your end, so we appreciate your time and welcome. We look forward to a very insightful presentation.
Thank you. Thank you for the opportunity. Can I share my screen? Okay, can someone please confirm that they can see the slides?
Yeah, we can see your screen very well, and we can hear you clearly too.
Okay, wonderful. So thank you again for the opportunity to present our work. And as Professor Kwati said, very grateful to Refined for supporting this endeavor. So let me start by just putting out some facts which many of the people in the audience would know, but just to put it out. India is moving digital, and but gender gaps still remain. So to give you some facts, what I'm showing you is all data from the World Bank's Findex database. So what you see is over the last decade, there have been significant improvements in people having an account in a financial institution. So, for example, if you go back to 2010-11, you see 20% of women and about 45% of men having an account. And over time, that's become almost 80%. And gender gaps have actually vanished. So men and women are both equally likely to have an account in a financial institution. And these accounts are being used at least in terms of providing services, in terms of receiving wages and government payments. So another sort of fact here is that if you look at people's wage earnings or government payments, dependence on cash is going down. So, only about, as opposed to 80% in about 2011, now only about 40% people receive their payments in cash. And this has been somewhat got into accounts as well. So about 20 to 33% has been the increase in wages received in accounts. Almost 60% of government payments are received in accounts, and about 40% of domestic migration remittances are received in financial account as opposed to cash remittances. So there has been this uptake of at least access to financial institutions. Now let me talk a little bit about their usage. So as Professor Quati alluded to, the big question here is the adoption part of this. So what I'm showing you here is, credit and debit card payments. And so, two things that you can notice here. One is the fact that there are still gender gaps in terms of trying to understand why men and women don't use credit and debit cards as much. So the usage of debit cards and credit cards at best was 40% for men, and at best was about 21% for women. So there's a gender gap in usage, but on average, the usage also seems to be low. And if anything, it is declining post-COVID because, as we know, of the adoption of digital methods. And then even if we look at that though, if we ask, have you ever made a digital payment or not? The one thing you see, for example, is, over time, there has been an increase in digital payments, but, once you take the average across the country, the digital payment, has someone made a digital payment is about 40% for men and just about over 25% for women. So it's growing over time. And of course, if you break this by urban and rural, there is again a huge divide because urban India is going more digital, but rural India is still not going as digital. But even between urban and rural India, you see that the gender gap in usage still remains. And so then the big question is, this is the demand side of things. Like people have access to these financial institutions and financial accounts, but the usage of these services seem to be picking up, but still challenges remain. So let me talk a little bit about the supply side now. And this is coming from all of this is joint work that we have been doing with IEIC, the Inclusion Economics India Center. And so we studied, we have been in the Begusarai district of rural Bihar for a while now. And so we've had some insights that I thought would be useful to share with the audience. So one thing we did is we have got 2 rounds of these censuses of FSPs. What are FSPs? They're financial service providers. So think about fintech providers, think banks, think customer service points, everything that you can think in the rural area that would give access to these financial services. And so we had a census that we did in across, I think, about over 100 GPs in 2022. And then we did the same survey again in 2024. And so the one thing you find is that it's a dynamic market. So in 2022, we had about 1220 FSPs, and by 2024, they've gone up to 1400 FSPs. So there's been a 200 odd increase in the FSPs. But here's also another aspect, which is there is a lot of churn that is going on. So it's not that all the 1220 FSPs existed by 2024. Only about 80% of them, so only about 973 FSPs were there in both the years, so across 2 years. However, there were about 20% of FSPs that actually closed down between these 2 rounds, and there were about 434 new FSPs that opened up, giving a net addition of about 187. So the point of this slide is to basically show you 2 things. One, that it is a dynamic market that's growing over time. So if you look at the year, if you look at the growth between these two years that we have in our sample, it's about 20% growth. But apart from just levels in growth, there's also a churn that's going on in terms of like earlier FSPs shutting down and new FSPs opening up. And so the big question then we were trying to go after is also trying to understand, well, there seems to be a growth again from the supply side. There are transactions that are happening, providers of transactions are growing in these areas, but yet why are people not using them? And so the big sort of insight that we got from this is the following. Turns out that banks are few in these areas, but people trust these banks more. Basically, the point being, people don't trust these new fintech lenders and CSPs. So just to give you a distribution, so this is the distribution of all the FSPs, the financial service providers that we could find in our sample areas. And what you can see is about 40 plus 35, so around 3/4 of the FSPs are either customer service points or they are fintech lenders. Only about 12% are bank branches in our areas. So there are very few bank branches, as you can imagine, right? Like you don't have a lot of bank branches in rural areas. And if you have, you'd probably have one in like a town, and then, villages might have some other smaller branches, mostly public sector branches. And so the distribution seems to be very skewed towards these small CSPs and customer service points and fintechs. But then if you ask people, do you feel comfortable conducting transactions? And so simple transactions, not even very complicated transactions. There's very simple transactions on deposits and withdrawals at different FSPs. The one thing that strikes out to you is that people trust banks more. This is the traditional way of conducting transactions, and so about 94% of people say that they trust a bank branch. Customer service points, which are basically smaller points at which they're also run by the banks but are smaller points, people trust them as well. So it's about 80% of them are trusted by customers. And then these fintech providers, which account for almost a third of this sample, only less than 60% of individuals say that they feel comfortable transacting in these FSPs. And so what you can see is already some gaps from the demand side in terms of trusting, even though there is availability that is from the supply side. And so therefore, one of the experiments that we try to implement in these areas is to look at whether, so as I showed you, so I'm going to talk of two studies basically that are ongoing in these areas. The first, which is more developed and we have implemented it, and the second, as Professor Kwati alluded to, is still very much work in progress, and Refine supported us in the pilot phase of it. So I'm going to give you some insights on both of them. So the first project that I'm going to talk about is basically trying to really go after the gender gaps in adoption that we had seen earlier. And so therefore, one of the things that you might imagine is that women have social mobility restrictions that are social norms that make them very difficult to go and access financial institutions. And so all the last mile agents that I just showed you in the pie chart in the previous slide, why couldn't we have women as agents of last mile change? What do I mean by that? What I mean by that is we had we partnered with Jivika, who's a large organization with a massive presence in these areas, and we call them Bank Sakhi. Sakhi in Hindi just means a friend, and so these were women-led. Initiatives where women were the last mile agents with which you could go and bank. And so what we did was we worked with Jivika to randomize the introduction of these bank Sakhis in about 100 GPs in Begusarai district. And then, we collected a bunch of data to then understand the evolution usage of financial service provisions in our sample. So this is still work in progress. What I'm going to show you is very, very preliminary results. Just a couple of things. So who are these bank Sakhis? They are women within the local village. They're not particularly out, like, they don't stand out in terms of, is it like the sarpanch's wife, or is it like the village leader's, relative or something? They're basically married live with their mother-in-laws, husbands, etc. The important part being that they're relatively young and they come as well-educated mothers. So education and age seems to be two dimensions along which they're younger and well-educated. Many of them, as is common in these areas, are members of self-help groups. As I said before, only about 2 to 3% actually hold an official position in the GP, which is the Gram Panchayat. And about 74% of them have had no labor force experience before becoming a Sakhi, which I thought was interesting in the sense that, anyway, female labor force participation in India is very, very low, and especially in rural areas. And so, it's not very uncommon to find women who haven't actually had any labor force experience. Other things on which Sakhis do, so on observables, if you want to think about it that way, age and education seem to be two dimensions. But on unobservables, which are sort of these attitudes and views about the role of women in society, Sakhis seem to be coming from more progressive families. So, for example, on a whole bunch of metrics that I show you on the right hand side, should women go out for work? Should a husband, the husband thinks that women should go out for work, and so on and so forth. What you basically find is that our bank Sakhis seem to be more, quote unquote, progressive in how they view female labor force participation and how they perceive family support for their work. And so so that was just about who these Sakhis were. Now let's look at how being a bank Sakhi, which is offering these financial products within the local community so that people can come to you instead of, traveling far to a bank, for example, or to another FSP. Sakhis, the customer base for Sakhis is usually much smaller than than banks, obviously, but also other mostly male-operated financial service providers in their local area. So what I'm showing you here is the average daily customers, and obviously banks are large, and so if you look at bank branches, they receive about 100 customers daily on average. And what you can see is that fintechs and other non-Sakhi CSPs receive about 20 to 30 people a day. And then if you look at our bank Sakhis, they receive about 9 people. So on average, they're receiving much fewer individuals. People still prefer to go to bank branches, and they still prefer to go to fintechs and non-Sakhis. The Sakhis that we have in our sample as well, they offer fewer services as well. That could be one of the reasons as well why people don't come here. So basically, they offer deposit services. Withdrawal services. And only 21% Sakhis actually offer deposit as compared to 75% of other local operators. And the big constraint when we were implementing this is that if people deposit money with a local woman in their village, the problem is the Sakhi still needs to get that cash that has been deposited to a bank. And so she needs to travel to the bank to be able to have enough cash for them to deposit back into the bank. And that mobility issue seems to be really biting at that point in time. And so mostly what these Sakhis do is help on a lot of other things such as financial account opening, withdrawals, and so on and so forth. But the important part being Sakhis serve most of the female customers in their village as opposed to other operators. So in terms of both the demand and supply side of female financial inclusion, you have both women leading the supply side, but which also attracts female customers towards them. And quickly, in the interest of time, I'm not going to explain all the 4 lines, but I would just like you to focus on the top 2 lines. And the top 2 lines are basically telling you that as opposed to say about 60 to 70%. So at baseline, when we introduce these Sakhis, we also ask people, just their sense of how much respect men and women have in their local community. And so what Sakhis report is over time, they're getting more and more respect within their community. People are appreciating the services that they're providing. And here is one quote, for example, from a Sakhi from Balia block, who said that more women come to us for withdrawals because we do not charge anything extra. And they themselves say, we never knew this much about banking and loans, but now we do. And this has boosted our self-confidence, and people respect more us for it now. And so not only has their self-confidence gone up, but in other interviews, what also seems to be coming out is that they are also helping other women become more literate in terms of all the financial transactions and options that are available to them. And so that was, where we are right now with understanding how bank Sakhis are changing the financial landscape in these villages. But let me step back and again, go to a more broader point that we want to make, which is the fact that adoption of, financial services at scale in these areas. And, we are going to try and this is the work that Refined has supported. And we have a pilot that we ran. I'm going to talk about it. But here we're going to make a case for both demand and supply side. So the argument being that simply intervening on the supply side, which is having more financial services, providers of financial services, or simply intervening on the demand side, which is educating more, customers and consumers to understand these financial transactions, might not be enough. And there needs to be a case that has to be made for both demand and supply side interventions, and the complementarity of these two might actually be able to unlock some of this adoption of financial services. Just to give you some quick examples on the demand and the supply side. So if you look at institutions, which are these financial service providers, the one thing that people always complain about is the poor quality of service. So for example, people say operators don't give us receipts, there are incomplete transactions, the operators might be creating fraud because of this, and they, seem to be charging fees that are inconsistent with what is dictated by banks for them to charge. On the other hand, if you ask citizens, as I showed you earlier, citizens also have limited trust. So despite the distance, locals still prefer to go off to these far off banks, and people, especially women and the elderly, are typically unaware of their rights. And so if you ask FSP owners, the financial operator owners, they complain about citizens, and they are just like, oh, like these guys don't understand if transactions get stuck, people blame us for fraud, but it's really not my fault. People are not aware, what these fees are, how they're, our commissions, etc., etc. So there's complaints on both sides about the other side of the market, basically. And so what we did in this pilot study was basically try and come up with, can we do supply side and demand side support to be able to train both local banking agents as well as individuals to be able to bridge the gap between both sides of the market. So what did we learn? So we basically designed a bunch of trainings, and we went to about 10 gram panchayats in Begusarai. It was a small pilot where we tried and implemented the supply side training with the FSP operators, and these basically focused more on best practices, and the demand side with citizens. So we went, mobilized a bunch of citizens, organized these trainings where people could come, and then we had a 1 to 2 hour training where we told them about how to hold your FSP agents accountable, what are some of the things that you should be aware, and so on and so forth. What did we learn? And I'll wrap up with this. What we learned is the following. Individuals' self-reported comfort and knowledge about doing digital transactions is quite low. So we asked individuals, how much do you think you're comfortable, or how much knowledge do you have? And the score was about 2 on 5. So individuals themselves know that they have, low comfort and low knowledge doing these digital transactions. However, what was most helpful was them to understand what are best practices when I go and do these transactions with an agent. So just understanding the fact that, he should be giving me a receipt, or he should be telling me, showing me my bank balance, for example, or I should be receiving a text message from my bank once the transaction is completed, etc., were sort of the things that individuals struggled with the most. In terms of implementation, the big learning for us was basically trying to really understand, if you want to train individuals in these areas, simple things like even timing of mobilization and training were important, apart from just the content of the training. So if you look at timing, men work during the day. So if you want to, so one training we organized was during the day, and basically most of the women showed up because men were at work. Similarly, we had women, if we organized trainings either in the morning or in the evening, that's when the time when women are at home because they have to have household responsibilities. And so men were available at that point in time. So simple things like these might also affect how the audience that you're able to target basically in these training programs. On the other side, on the supply side, and I'll stop with that. On the supply side, what we basically find is that most of the FSP agents told us that training was nothing new for them, right? They all knew about all of these concepts. They knew about all of these practices, and even the certificates that we provided. We were excited that at least if you have a certificate, that's a visible signal to customers saying that you've taken some training on best practices. But they said that certificates, no one really cares about it. It wasn't exciting for them at all. Instead, what they were really interested in understanding was how from others' experiences. So you have two FSP agents, and really when they got talking with each other, they sort of wanted to learn about strategies to deal with these downside risks, and especially with incomplete transactions. Because when transactions get stuck, the one thing that customers always think about in their minds is that this guy's a fraud. Like my transaction is and the transaction could be incomplete because of a lot of other reasons, right? Such as poor connectivity, electricity goes off, and so on and so forth. So internet quality, etc. So but talking to each other was very helpful to understand that everybody's facing the same problem, and b, like how are different people dealing with these different problems. And so really the way forward as we think about it is basically along two ways. One is understanding the limitations of this access and adoption, and introducing more agents into the local ecosystem can be beneficial. This is the bank Sakhi that I talked about earlier. However, there might be a case that needs to be made both for the demand and the supply side of interventions to be able to improve this in equilibrium. And given the dynamism that is already there in the market, as I showed you earlier in terms of FSP shutting down and opening up, what would be really at scale interesting to study are these equilibrium changes at the market level. So is it true that with these trainings, FSPs are able to target, provide better service, but also customers are able to identify who are the better service providers, leaving the other low quality service providers to exit the market, for example. So let me stop there, and I'm happy to take questions.
Thank you so much, Professor Gaurav. I think your way forward, the questions are really food for thought. And please feel free if you have any questions, kindly put it in the chat. Professor Gaurav will be in the chat to answer some of the questions. And also when we get to the Q&A, he will provide more insights into his presentation. So please feel free to go into the chat and put in your questions. So before we go into the next, do we have the next slide? Okay, great. So our next presentation, can we stay stable on the slide, please? Our next presentation is looking at the effect of bank branch expansion on credit and investment firms in India, focusing on small and medium enterprises. So we welcome Professor Kanika to take us through this presentation. Thank you.
Thanks, Rosalind. Let me just try to share my screen. Can you all see it? If someone can let me know.
Yes, we can see your screen. Thank you.
Okay, great. Thank you. Thank you to Refine for calling me for giving this presentation. Happy to share some of our work along the lines of seeing how financial inclusion can improve firm level outcomes. So at the outset, let me tell you that this is not perfectly about the last mile coverage, providing the agent networks, but more about how physical access to bank branches themselves can help firms. And maybe there are some lessons that we can learn about, what other roles can the last mile agents bridge apart from, just helping in at the transaction level. Maybe, there is a bigger role for them to play in terms of improving the credit market access also for households in the areas that they begin to serve. So this paper is joint work with Nirupama and with Ritati, who are my co-authors here. And what the question I've sort of broadly laid down, but more importantly, what we want to see in this research is how bank branches not only alleviate overall credit market constraints, but can help more in terms of alleviating these constraints for firms or enterprises which are more likely to face them. For instance, the small and medium enterprises. They form a large part of the Indian economy. They account for almost half of the formal employment in India as well. And they're also more likely to be credit constrained. So for instance, the World Bank Enterprise Survey shows that about 75% of the SMEs report lack of access to credit as one of the major constraints that they face in terms of improving the growth and expanding. and what policies can help them overcome these credit constraints still remains an open question. Maybe bank branches, maybe connecting them through the agents network can also be beneficial. But we don't understand these questions as well as we understand the overall access to credit markets. And what really constrains these SMEs? The broad constraints that they face are the fact that they don't have enough collateral, the fact that collecting soft information about them is costly because they're small in nature, information about them is not easily available, monitoring them is also more costly. And here, presence of someone who can collect soft information about these firms, inform the loan officers becomes important for these SMEs to be able to access credit that's available in the market. And here, what becomes important to be able to gather this information and also to monitor these firms is physical proximity to these financial institutions. However, can just providing them access to credit help them expand? This may not necessarily happen, especially if access to credit is not the only constraint that they face. Perhaps they also face constraint in terms of other market access, and in that case, just access to credit or increased uptake by these firms may not be enough for them to expand expand their capital expenditure and their output. And here, last mile connectivity becomes important. If we look at at a business correspondent as an extended arm of a bank branch, so we have a bank branch that is somewhere between the actual bank in the major bank outlet in the urban center, and then you have a intermediary bank branch, and then finally the business correspondent. The kind of services that business correspondents at least are perceived to provide are typically the kind of services that you would expect a bank branch to provide, such as opening accounts, making withdrawals, making deposits, sending remittances, purchasing financial products, and I guess over time, maybe providing access to loans as well as making payments of these loans will also become an important part of the services that that the BCs provide. So again, then it becomes important. Okay, can there be a role played by the BCs in terms of gathering this soft information and passing it on so as to be able to increase access to credit for these household enterprises or these small enterprises that that operate from the villages? That's a bigger point that we want to take away from the current analysis that I would be presenting today. So the policy that we will be studying will be in the context of India. The policy was the branch authorization policy of 2005, which basically incentivized banks to expand their operations in the underserved regions or the underbanked regions in India, which were defined as the districts where the bank branch density was less than the national average in the year 2005. And the incentives that were given to the banks was that if they expand in these underserved areas, then their expansion plans in the other areas would be favorably considered. Now, there could be, one could be the broader question of does just expansion of banks help in financial deepening? Second, when it aids financial deepening, which kinds of firms gain? Are the bigger firms taking away all the gains, or are the smaller firms also gaining? And if the smaller firms are gaining, then what are the mechanisms that are driving these gains by these small and medium enterprises? And here, what we find is that proximity to the bank branch is critical for the small and medium enterprises to gain from this policy. Broadly, not going into the details of the policy in the interest of time, but given that the policy was announced in 2005 and it used data before 2005, we can use a regression discontinuity design to be able to understand the causal impact of the policy on various firm level outcomes. And this policy was almost like a sharp RDD with the exception of 9 districts. And given that the policy rule was smooth, continuous, we're able to exploit and use a regression discontinuity design to be able to evaluate the impact of this policy. The firm level data set that we use from India is a panel data set on manufacturing establishments. It's nationally representative, covering registered manufacturing enterprises, and importantly, it has enterprises ranging from 5 to 10 to even 100-sized workers, and it collects information on the assets, machinery, workers employed, as well as outputs and loans of these enterprises. And again, an advantageous part is that it is a panel data, and hence we can see how firm level outcomes are changing over time, taking into account firm level unobservables. Our primary outcome of interest here are the capital expenditures which the firms are making, as well as their access to credit. We are also interested in looking at what happens to their output as well as employment. However, in this presentation, I'll only be presenting results on their credit access as well as capital expenditure. And we will be complementing this data set with other data sets from the Reserve Bank of India, as well as other data sets which also collect information on a variety of firm level outcomes. Not getting into the details of the empirical strategy, but broadly we are combining a difference in difference strategy with an RDD design, which is referred to as the differences in discontinuity strategy. We're basically looking at what are the changes in outcomes at the firm level in districts which got increased bank branches vis-a-vis which did not get these bank branches over time, given that we have a panel data set and we can follow firms both before and after this policy was implemented. This becomes a natural choice for us to look at the impact on the firm level outcomes. So what do we find? We find that overall, as expected, if there's an increase in bank branches, which largely took place, which took place in the underbanked regions, there will be an increase in both capital expenditures as well as the credit offtake in these districts. We find about a 6% increase in capital expenditures in these districts after the policy was implemented. However, more importantly for our purpose, we wanted to understand which firms are gaining from access from financial inclusion through access to bank branches. And here what we wanted to look at are measures of defining small and medium enterprises. So we look at how these impacts are heterogeneous by establishment size. So smaller size firms are the small and medium enterprises which are more likely to be credit constrained. We also combine this with both size as well as age of the enterprise, and also look at does the enterprise have any listing status? If it's unlisted, then it's also likely to be more financially constrained than the other enterprises. So we just look at the heterogeneous impact using our baseline specification to understand which kind of firms are driving the increased capital investment as well as increased access to credit in these districts. What we find is that it's the lowest, it's in fact less than median size firms, and moreover less than like firms having less than 25 employees, basically, which are micro size small and medium enterprises, which are driving the positive increase in capital expenditures, as well as the positive increase in credit growth. And almost it's about 12% increase in capital expenditures, along with approximately 15% increase in credit growth for these firms. So primarily, when the bank branches expanded and there was increased availability of credit, the smaller firms were able to gain a bigger share of that growth as it happened. And in fact, they were the main drivers of the growth in both credit access as well as the capital expenditures that were undertaken. So we wanted to understand the mechanisms. Is there there could be multiple things that could be happening here, and the results I'm going to present today are basically for one of the channels that we think is important when it comes to understanding what kind of constraints might be binding for smaller enterprises. And here physical proximity might play an important role, especially to gather soft information about these enterprises. So what we did is we computed the distance of establishments using the economic census in India, which is the census of all enterprises, including household enterprises, and mapping the establishments to the nearest PIN code of the bank branch, and calculating this nearest distance. And then we saw, was there a greater reduction in distance due to the BAP policy that was implemented by the government of India. And what we find is that after the BAP policy was implemented, the decrease in distance to a bank branch was higher. In fact, the decrease only happens for the underbanked region. So we see a distinct decline in distance to the nearest bank branch in the underbanked areas vis-a-vis the other areas. Given that this policy primarily incentivizes the private bank branches, we only see this for the private banks vis-a-vis the government banks. For government banks, we see no reduction in the distance to the nearest bank branch network. We also find that these results in terms of decline in distance are driven by the smaller firms. So primarily the areas where the decline in distance happened for the smaller size firms are the areas which also see an increase in uptake of both capital expenditures by these firms as well as increased credit growth for these firms. So broadly, our findings sort of tell us that the physical proximity matters. However, physical proximity may not be sufficient unless you have enough human capital that can also gather information about these firms. And to look at the human capital angle, we looked at the bank staffing decisions. And here we had information on the loan officers, which are responsible for processing the loan applications at the bank branch level. And they are the ones who are sort of responsible for collection of this soft information. And we expect that not only financial deepening is accompanied by increased collection of the soft information, that we would see an increased uptake of loans for those small and medium enterprises. And to estimate whether that really happened in the case of this policy, we again use the regression discontinuity specification to identify if there was any discernible changes in the allocation of bank of human capital across these underbanked and the other areas. And what we find is that, again, we find that there was a distinct increase in the share of officers amongst the entire staff in the underbanked regions vis-a-vis the other regions. And this only happened for private banks and not for government banks, given that, again, the private banks were the ones responsible for the expansion of these bank branches. So overall, our results show that financial deepening, just providing greater access can enable, alleviation of credit constraints for smaller size firms. However, the critical mechanisms that we find are A, the physical proximity, and second, investment in human capital by the lenders. These two seem to be important to be able to lend to smaller borrowers. Given that in fact, since 2006, since the BC policy has been implemented in India, there has been a shift from 2010 onwards, that apart from constructing these physical brick and mortar kind of bank branches, it's the business correspondent model which has been gaining traction in the government policy for financial inclusion. There has been a vast expansion in the business correspondent outlets across Indian villages where bank branches are not currently available. And I think one of the questions that probably remains to be can be answered is that whether provision of these whether the BCs can actually provide a substitute for bank branches when it comes to lending activities, and also spurring livelihood generation by promoting credit access for the smaller size rural enterprises, which are very, very small in size. And here we have some interesting lessons in terms of how the private banks BCs may differ from public sector bank BCs, because we know that private banks are more aggressive when it comes to dealing in a small ticket size credit loans. And generally the PSBs are more engaged in withdrawals and deposits kind of activities. So is there a difference across BC networks that can be exploited across the private banks and the public sector banks? Gaurav has already given an excellent presentation. This was one of the questions I had, what can be the role of bank Sakhis? And I think his ongoing work is going to address it, and flesh it out as it goes along, given that we only have a very small representation of women amongst the business correspondents. And lastly, what is the role that technology can play, given that we know that profitability is an issue in the BC market? Can using technology decrease some of these transactional costs and provide more incentive for the BCs to engage in different kind of financial activities apart from just undertaking transactional work. So let me stop here. Yeah, thank you.
Thank you very much, Professor Kanika, for your presentation. And once again, we encourage you to put your questions in the chat as we move on the conversation. So we've had two insightful presentations from Professor Gaurav and Professor Kanika. We want to invite you to just spend 30 seconds to undertake this poll. So basically, can we see the poll question up, please? Great. Great. So from the two presentations, what do you think are the key constraints that agents face in delivering quality services? So you've heard from the first presentation, you've heard from the second presentation, though not specific to agents, it also talks about bank branches. So we want to hear from you, what do you think are the key constraints that agents face in delivering quality services at the last mile? So this is how to participate. The first is, if you go into the chat, there's a link to the poll. You just click on the link and you type in that 1 or 2 words that describe what the key constraints are. Or you can scan the QR code you see on your screen and just follow the steps. So either the link, which is right in your chat, or the QR code. Good. So we have, we started having responses coming in. So we have a number of people who think customer is a key constraint that agents face in delivering quality services. So financial customer is reducing trust. We see trust gaining more responses from participants. Great. So trust is still one of the key constraints that participants here think agents face in delivering quality services at the last mile. Great. Interestingly, customer has reduced significantly. We see trust, lack of trust. Okay, good. So trust is a key issue. So we have trust, lack of trust, customer trust coming in strongly. Other key constraints we are seeing aside the issue of trust is financial literacy, customers, okay, bad connectivity, regulatory frameworks, yeah, service quality. We have 21 responses. Can we lift it up to about 35? Please go into your chat. There's a link there, or you can scan the QR code and let's hear from you. The framework for FSP is interesting. Financial literacy. So we see trust, the whole thing about consumers trusting the agents. I think is one key constraint that you participants think is an issue. Then the issue of financial literacy is coming up strongly. Then the services, okay. So Professor Gora, we have some questions in the chat for you. Great.
Yeah.
We have 27 responses. Can we move it to 30? Can we move it to 30 and then we launch into a very interesting conversation? We've heard from the researchers who go to the field to pick data, to pick evidence. In the panel, we are going to hear from those who are on the field every day trying to get agent services to the last mile. So we're going to bring experiences from the field here to see if they align with what our researchers are getting. Great. So trust is still on top as a key issue. Derek, can you take us back to the screen before we jump in? Can you take us back to the responses so that participants can have a good idea of where we ended? Hello, Derek. Great. So we had 28 responses from you, and trust came out as the key constraint agents face in delivering quality services. We want to hear from the panel to see if these key constraints really reflect what they are seeing on the ground at the last mile when they go there to try and drive agent networks. Great. So it's time for us to move into our very engaging panel discussion where we get to hear insights from the field. So to take
Rosalind,
us,
is Umi still having challenges?
Umi. Hello, Umi.
Hi,
Great. What do you want to take over now?
I can try and see. Thank you so
Okay.
much for stepping in, Rosalind. I think I continue to face issues. I don't think I'm audible
We
consistently.
can hear you, Umi. We can hear you
Can you hear me consistently or with
perfectly.
breaks? Okay. Okay, great. Well, thank you so much. I think I kind of have, three questions, and it would be great to kind of bring. Hello?
Umi, you're back.
Sorry, Rosalind, I think this challenge will persist. Do you mind taking over? I'm very sorry.
Okay, that's fine. Great. So to lead us in this conversation from the field, we'll have the previous presenters also join the conversation, but the key discussion will be our presenters from the field. Beginning with, we have Dr. William Durban, Dr. William Durban, who is the head of Program and Partnerships Digital Innovation Team of Opportunity International. And Opportunity International has been at the forefront of driving business correspondence agents in India. They have a very exciting program where they work with women. So he'll be sharing insights on that. Dr. Durban, welcome. We also have Miss Ashuwarija. I hope I pronounced your name well. The marketing lead, FIA Global, where she leads the working of expanding FIA's work on driving financial inclusion among women and other marginalized groups. She has over a decade experience in sales and marketing from the field. Miss Asiwaja, welcome. And then finally, we have with us Mr. Sunil Kulkarni, who is the CEO of the Business Correspondence Federation of India. And I think he's the right person to have here on this conversation. He brings on board the experience coordinating all these BCAs, and he'll give us first-hand experience on how we can improve quality at the last mile. So to our august speakers, thank you very much for agreeing to join us on this conversation, and welcome. Great. So before we start, we delve into our discussions, I think I'll give everyone about a minute or two to share your quick reflections on the insights presented by our previous presenters and also from the poll we just had. So 1 to 2 minutes each for you to share your overarching insights. So I think we can start with Dr. Durban and then Asi and then Mr. Sunil. Thank you.
Thank you very much, Rosalind, and it is an honor to be part of this discussion. And good afternoon, good evening to those on the call. And this has been a very exciting discussion so far. I think that the issue of trust comes through everything that we do. Without trust, this kind of business at the last mile doesn't work, because people need to trust the systems that that exist. So I think that's quite obvious. In our case of Opportunity International, we are really keen on gender, and I think some of those issues came out. And I think that we will talk a little bit more about the role of gender, or the importance of encouraging more women to become BC agents, or to operate at the last mile so that they can serve other women. And to us, that is really key if we want to get especially rural poor, will be engaged in financial services, engaged and using financial services. I think the whole issue of quality and trust will come in there. So I'll sort of pause there, and I'm looking forward to a more exciting discussion. Thank you.
I'm muted, sorry. So you manage a BCA, ISSER. Can you share your insights? Does the presentation reflect what you are getting from the field?
This
Hello,
is
can you hear
Sophia
me?
Global, right?
Oh, yes, I think I was muted. So I wanted to get your perspectives on the presentation so far. Does it reflect what you are seeing or experiencing on the field? Sorry, I was muted.
Is that for me?
Yes, for you.
Sorry.
Thank you.
Okay. Sorry, I didn't catch this. It was a great discussion, brings to the point about how to keep the customer, the end customer, in the middle of everything that we do with the BC network, and dwells on the importance of the services that we provide, something which we at FIA give it an utmost importance. So I think my insight, what I derived from here was around customer centricity.
Great. Mr. Sunil, participants say that customers don't trust your agents. Do you share in that? Or customers have issue trusting your agents?
Yeah. First of all, thank you for inviting me, and good afternoon, everyone. See, one thing is a fact across every space of life is that the bad news spreads fast. It's the good news which takes ages to get established. Especially the presentation by Professor Gaurav showed that highest trust level is with the bank branch, followed by the CSP, followed by the fintech. And that clearly reflects also how the bad news spreads about bank, CSP, and the fintech. Clearly, what happens is that we have here today, I mean, the data showed 1.8 million agents which are rural. This is data as on December 22. But not all agents are doing the same amount of business. And then there are viability issue in terms of what these agents can do. So bulk of these agents, if you ask me, are doing the cash in, cash out and money transfer, whereas there is a need for services beyond just the classic banking services. So we are looking at financial inclusion 2.0, which will bring in more viability. And if current viability is because of the commercials that are there for cash in, cash out and money transfer, it leads to some of the cases overcharging, as Professor Gaurav has mentioned. In some cases, you can't find in 1.8 million agents, 100% ethical agents. So you will find some of them being not great. And that's why, more importantly, the agent onboarding and the quality of agent onboarding is where I think maximum emphasis is required to be done. Because if you keep on onboarding at a very large number, not only the quality may suffer, but even if one small fraud issue, it will spread over that entire district, and then in some cases the entire state, that bad news, which will bring the distrust, which is the primary factor in your survey that showed that bank branch is the highest trust point. So the very valuable insights, and these insights are corroborating the thinking that we are also having in BCFI. In fact, the February 2024 governor of RBI issued a statement which talks about a robustness of AEPS, Aadhaar-enabled payment transactions. And that robustness of AEPS, he has mentioned that they will be issuing more guidelines on the agent onboarding. So it is pretty much in the radar of the regulator to look at the quality of agents, look at the onboarding, and finally, more importantly, beyond onboarding, how you monitor, because once you have onboarded, there needs to be monitoring by the corporate BC and above all banks. So there is a responsibility by banks to have monitoring of corporate BCs and in some cases even the BBC agents, especially for PSU bank BCs who are having link branch. But for private sector bank BCs, they need to have monitoring of corporate BC, and in turn corporate BC needs to have monitoring of the BC agent, which is the CSP. That would bring in far more improved quality of agent network, not only in the agent, but the transaction and the quality. Thank you.
Thank you. I think you've just set us into the next phase of the conversation. You've identified some key pinpoints when it comes to the constraints. One, the quality of the onboarding. You are pushing for the fact that we should not just move at onboarding a lot of people, but the quality of the agents and the quality of the onboarding, and the big issue about monitoring the agents from the super agents, and also from the regulators. Dr. Deban, let's come to you here. Sunil has set the conversation going on constraints. We saw from Professor Garu's presentation about the fact that even though we have women as the Shakis as agents, we still have we are not seeing impressive business compared to men. What accounts for these what constraints account for this trend from the rollout of female agents at your? Is it a quality issue? Is it an onboarding issue? Is it a customer issue?
Yeah. Okay. Thank you very much, Rosalind. I think for me there are three key issues that I would like to touch on. Building on what Mr. Sunil has said around the onboarding. I believe that as part of onboarding, you need training, and we sort of throw that word there every time you go and talk to BC agents, and I've visited quite a lot in India over the past year or so. Oh yes, we require training, but nobody wants, as they call it, the book-long training. Nobody wants to sit there and read a book. But I think it's also important, and I think India is fortunate that you do have a structured system, where they can take some training and they can get certified. And I know that the research showed that, yes, for the bank side, they were not so concerned about certification. But I've seen agents, especially women agents, where that certificate, in their shop is extremely powerful. I mean, one lady said, look, people see me as the bank manager in this village. My only problem now is that I may not get married because people see me as a bank manager. So it's really empowering for them to get certified. But for me, it's not just about the certification. Training has to be meaningful, and it has to be in a way and in a manner that the agents enjoy. They must be able to access that training. You and I may be used to reading a big book and learning that way. For most of them, that's not the way. Most of them go on their phone and they use TikTok, and that's where they get their information from. So when you talk about quality, the question is, for an agent, looking at the level of agent that we are talking about, where do they get their information from, even as to how to operate the business? If somebody comes to them with a problem, where do they get that information from to know how to deal with it? Would they call the bank? Where would they go to? They will go to TikTok, and then you have a big problem because you just don't know where they are getting that information from. So I think the way we actually train, how we impart information, is important. Now there's technology available. People are using Duolingo to learn language. So there are new ways in which we can train people. And at Opportunity International, we have it's now a prototype, but we have developed a chatbot, using Gen AI, where it's really to help them pass the exam, where they can ask any question at all on this chatbot through WhatsApp. It's on a WhatsApp platform, and it will come up with an answer. And I use it a lot because it helps me understand a little bit more about the BC agent. So there are simple ways and scalable, low-cost ways in which we can offer training. The second thing is about products. Are they offering the right products to the customers? Because if you don't have the right product, then your customer service will be poor. And these products, they need to be human-centered designed. You know, they will really have to look at the needs of the community, the women in the community, and make sure that we have the appropriate products for them. And the last bit that I hear quite a lot in the field is about infrastructure challenges. You know, people go there and the system was down. You know, some transaction couldn't go through. And for me, those are big issues for anybody dealing with technology. If you go to an agent and you want to do a transaction and the system is down or there is some problem, that brings down the trust. You know, that brings down the trust. And that's a big issue, I suppose, more for the FSPs and the agent networks to try and make sure that the technology or the infrastructure that they are using, the portals that they are using, have a very high uptime. So I'll sort of stop there and pass it on. Thank you, Rosalind.
Thank you very much, Dr. Deban. So we'll come to FIA Global. So you run BCA agents on the ground. You've heard from Mr. Sunil, you've heard from Dr. Deban, the issue about onboarding, training. We also heard from Professor Gaurav about cash management. The challenge of the females moving the cash to the bank, getting the cash from the bank. From your perspective as someone who runs these BCAs, how are you addressing these constraints? How are you dealing with these constraints? And are they really the constraints you are dealing with, or they are extra constraints?
Thank you, Rosalind. One of the things which I really appreciate what Mr. Durbin has pointed out is the importance of training and the wonderful chatbot that his team is actually bringing forward. We are also working on something similar. I would say to some extent, yes, we do face issues of onboarding, but we do have a clear line of control with the number of agents who a person handles in our team. So there is a clear control and monitoring system that is in place. However, one of the things which I would like to highlight is what happens is after a certain period of onboarding, perhaps there needs to be more monitoring on the kind of products that are being offered to our customers, which clearly needs, you can call it cross-selling or upselling after the initial cash in, cash out relationship that the agent has developed with the customer. That is something which we are clearly working on in order to bring more viability for the business model of business correspondence, as well as trying to make them more financially aware of what is right and wrong for the customer, because they are, after all, advisors for our end customer. So, yeah.
Great. So, Dr. Sinu, Mr. Sinu, there are some questions in the chat for you, but we'll come to that. But Mr. Sunil, we talk about financial inclusion, about leaving no one behind. And also, we know that from a lot of the financial service providers, they don't like going to the rural areas because they don't find it business worthy, and then they'll have some challenges. So leaving no one behind, from your perspective, do you think there are some customers that are difficult or have special challenges to reach? And how can you, as a federation, attempt to meet that constraint? Are some customers too challenging to provide quality service to? Are there any specific categories of segments, customer segments that you think are quite challenging to provide quality service to? Yes, and how, from your federation perspective, what do you think should be done to reach these segments of customers? Thank you. Mr. Sunil, you are muted. Yes, you are muted.
Yeah, now am I audible now? Yeah.
Yes, please.
So yeah, thank you. If you ask me, typically we have now reached a BC agent point pretty much in every village of 10,000 and more. So that is a very good penetration of BC agents. We have today about, as we talked about, 1.8 million BC agents. If we give you the same perspective, India has about 260,000 ATMs and some 150,000 bank branches. 260,000 ATMs, 50% are in within the same location as the bank branch, which means that balance 50% are what is called off-site ATM. Now, which means 130,000 ATMs are off-site, which are away from the bank branch, of which almost 75% is in the metro and category A cities. So you are left with about 30,000-40,000 ATMs, which are beyond metro or category A cities. And India has about 650,000 villages. So 650,000 villages catered by about 40,000 ATMs for the cash management is grossly adequate. That's why you find that the BC networks has grown in the last 5 years. Especially, I think there was a discussion about technology. As we moved from basic POS-based banking, which was earlier micro ATM alone, which was a very expensive large equipment, to a mobile-based Aadhaar-based banking. You have now Aadhaar, the biometric-based cash in, cash out, and a full real-time interoperable transaction happening on mobile. The issue of a large capital expenditure to set up a BC agent outlet is no longer there. You have probably less than $50 worth of equipment, which is a biometric equipment required for that purpose, and a mobile worth 10,000 rupees, which is about $100, and then you are in business. So clearly, the earlier issue of having a capex for setting up a BC network has gone down. Now, what has happened because of that is, so there are, even in BC agents, I'm just taking a little more time because the BC agents today, there are certain agents which are dedicated agents, which means they do throughout the day the same job, which is that of a banking services. Now, these are also called banking outlet because they are supposed to work for minimum 4 hours, 5 days a week as BC agent, and that becomes their bread and butter. So what happens is they have a very large shop and they have counters, they have all kind of paraphernalia to represent a very large BC outlet. But as you move towards rural areas, especially 10,000 and below, even 5,000, the overall demand goes down and you can't invest in such kind of infrastructure. So you work with an outlet which is already doing a service like a grocery shop or any other shop. And that's where the BC banking services is one of the revenue stream that he has, and not the only revenue stream. Now, that's where the viability question comes, because as Dr. Devan has mentioned, we are talking about training for these guys whose overall earning BC banking becomes only 5 or 10%. Can they read the whole book? Can they even go through those exams which are required to be done? And their only transaction is cash in, cash out, and money transfer. They are not opening bank account. They are not doing social services scheme. They are not doing anything else. These are the classic. In telecom, you have SIM selling outlet and you have recharge outlets. These are the equivalent of recharge outlet in, if you may say, for banking. But yes, it is not comparable. This is financial services are significantly serious services. So in terms of penetration, we don't think there is a challenge right now, at least in India, of reaching the banking services to the remotest corner. The problem of transaction failure and the issues are not just related to connectivity. It's a myth. Today you have Geo 4G and you have mobile, which pretty much gives the connectivity. We have today a transaction going from BC agent to corporate BC to sponsor bank to national switch called NPCI, from NPCI to issuing bank from where the transaction is being withdrawn, and any of these location, if there is any place there is a connectivity issue, or even in some case the bank CBS is misbehaving, is down for whatever reason, and there are enough instances, the blame comes on the BC agent. So the same blame does not come when he is going to a bank branch, because bank branch person will say, okay, come after half an hour, I'll get the transaction done for you. That option is not available at a BC agent level. So the quality of service is a direct function of also the entire infrastructure chain, including the banking infrastructure, where you will find that there is more to be done in terms of getting this thing done. Once you have a very reasonable, and today there are no SLAs for banking services from any of the
Mr. Sunil, looks like we're losing you. Or am I the only one?
No, I think it's frozen for all of us.
Yeah. Okay. Let's give him some few minutes to see whether he comes back. Okay. I think whilst we wait, can someone kindly alert Mr. Sunil? Maybe, Umi, can you alert him by text message or WhatsApp?
He's back.
Mr. Sunil, okay, you are back. You went frozen. Please unmute your microphone on the other device. Hello? Oh, the other device is off and you're still frozen. Okay. So whilst we wait for Mr. Sunil to come back, Dr. Deban, within the female category, the female agents you're working with, are there any special category of females that experience more challenges with onboarding or with getting more business? We heard from Professor Gaurav that even though they attract female participants, they also have the challenge of attracting business. Is this across the board, or there are some specific female agents that have this challenge?
No, thank you very much. In our experience, we haven't found any, in terms of women becoming BC agents, I haven't sort of noticed any specific type, but just looking at the category of women is very similar to what Prof said. Younger women, slightly educated women who come forward that want to be BC agents. So I suppose in that sense, the less educated ones, would often struggle to become BC agents. It's just having the confidence to say, I want to become a BC agent, and having the support of the family, to become a BC agent. And we've seen or listened to cases, spoken to women where when the family does not support, for the young girl or for the woman to go out and work, then it becomes a challenge for that person. But where there is support, then they successfully do that. We chatted with a woman where the father paid for everything, the capex that she needed for her to become an agent, because there is some amount of money that needs to put. It's not a lot, but it still requires some money. And in many cases, I've also seen where the husband is supporting, so the husband is also there, and sometimes they do work together. So where there is support, I think that the women are successful and they're happy to become agents. Where they don't have that support of the family and the people nearby, then it's a slightly more difficult barrier to climb. I think Mr. Sunil is back.
Yeah,
Yeah,
Mr.
hi.
Sunil, we lost you. We lost you.
Yeah. Am I audible now?
Yes, you are.
Okay. I don't know where did I leave because I kept speaking.
I think we lost you around the point you were talking about the fact that the connectivity issues come from the chain in the infrastructure.
Yeah. So
and not
what I was saying
necessarily
is
what
that
we face at the BCAs.
Yeah. What I was saying is that currently the quality of service and agent quality are being discussed, but there are no SLAs today for banking infrastructure to provide quality of service. So we today do not have any SLA from bank that, okay, their server will be at 6 sigma or 5 sigma or 5.9 availability. So we do have to have similar availability numbers available from the banking infrastructure, because it is not just at the so today, if you see any first 100 million customer who are on mobile banking, anything which is down even for half an hour, there will be Twitter full with complaints, and people have to immediately respond to. Here you have also infrastructure being down for not more than not less than half an hour or 1 hour or 2 hours, and there is no so typically BC agents customers don't tweet. So you will not get these kinds of issues with there. So there is a need for overall improvement of trust factor to also have these, what I call them as corner cases, which are the transactions which are indeterminate, which means you don't know whether it has been successful or it has failed. And that's where bulk of the problem happens. The bulk of the reconciliation problem are because of these transactions, where the agent does not know definitively whether the transaction has been successful or failed. So the transaction quality has more to do with both infrastructure at the agent end, which has been largely addressed because of 4G and smartphone. But the infrastructure beyond corporate VC to the entire value chain up to the issuing bank needs to be equally rugged and reliant to make sure that the transaction is successful in the same way as a traditional mobile banking transaction.
Thank you very much. FI Global, I see from your management of your BC agents, and listening to Mr. Sunil, are there some specific BC agents who have a lot of challenge when it comes to providing quality service to their communities, and who are these agents within your portfolio?
Sure. One of the things that we actually pride by is the fact that we have less than 0.01% frauds within the systems. Increase in frauds is another way of saying that there has been dissatisfaction from the agent, whereas his own margins have dipped, and which is why he's been not being very honest with the customer. So we do take that as a testament to, train them in order to understand. It's a communication process, and to understand what is happening on his end. That's number one. Of course, there are challenges that are faced by agents, especially when there are when there are shocks, that is environment shocks that they face. And one of the things that we try to do is bring in policy interventions and advocate for them. It is a uphill task, but it's something that we do think it has to be done timely and more frequently. When it comes to women customers, we have seen that they prefer not to have very transactional relationships with both FIA as well as their own customers, which is something which brings longevity in their longevity in the system also. Challenges that women face is, if there are, if they faced a family issue, they tend to drop off from the business quite easily. That is something which we've noticed. So we do look for sponsors who can help bunch of women to actually sustain their business longer. And but having said that, I want to say that challenges faced by the VCs are far more than what they actually lead us to show it to us, and which is why creating a robust system of communication with them is extremely important and pertinent.
Thank you very much for that. We have some questions from the participants, which we want to have you respond to. And also, this is the time for participants who ask questions. So if you have any questions to our panel or to the previous presenters, please feel free to raise your hand and we'll give you the floor to make that to ask that question. So we have a question we take from the bottom from Professor Corte. I think it can go to all three of you. Is agent security a big issue on the field? Is agent security a big issue on the field, especially for women agents? And then a specific one to Mr. Sunil is, has the Aadhaar-based withdrawal transaction cap for each consumer in India affected or affecting expansion of financial services by the agents? So I think we'll take the first question, each of you, and then the second question will be Mr. Sunil. And once again, we welcome questions from you, so please use the raise hand icon and we'll call you to ask your question. Thank you. Great, so who'll take the question first? Mr. Sunil?
Yeah, I would like to take
or Asi?
Sorry.
Okay, Asi. Yeah, Asi, please come in.
Yeah, agent security is it's an utmost it's a question that we all grapple with, especially in areas that they function. So there are many areas with socioeconomic problems where they actually function in, both men and women. And while there are issues of these kind, we try to bring these issues up in front of the government, as well as we take these up ourselves and try to, with the help of our own field team, we try to circumvent these issues and help them through these difficult times, especially during the times like the pandemic, when we had agents who actually lost their lives. So these are things which we grapple with almost on an everyday basis.
Very insightful to know, to the point of agents losing their lives. Mr. Sunil, is it high on your radar, agent security?
Yeah, so agent security is a function of the traffic and the business volume at the agent level. So if the agent is transacting daily about $200 to $250 a day, there is hardly any issue with the agent security. But what happens is, in this business, also 80-20 rule applies. So especially the banking outlets, which are dedicated bank outlet, especially on the day of wages being disbursed or benefit payments being given, there is a very high volume of cash transactions happening, either cash in or cash out. So the agent needs to have substantial amount of cash, and that's where you do get some such events where agent security is under question, and it has been compromised in some cases. As per RBI circular, the cash at the bank, cash at the BC needs to be insured by the bank, and that has not been implemented in 100% of the cases. And as a result, the exposure comes to the BC agent himself on security as well as on cash. So to answer your question, yes, agent security is an issue, but not at 100% of the location, especially the location where there is very high business volume.
Yeah,
I think in Ghana, agent security. Yeah, Dr. Devon, please come in. Yeah.
Yeah, I was just going to reiterate what Mr. Sunil is saying, because he also mentioned that there are two types of agents here. So you have the dedicated ones that are just doing bank, and then you have those that are doing other, they have a shop and they sell a lot of things, and agent business could be 10-20% of their business. So in terms of security, for the ones that they do other stuff, then you've got to figure out, is it that the person was targeting their agency work, or is it the fact that this is just a successful business? So I think that there are other things that we need to sort of investigate further. In terms of our own work, and we tend to work in the rural communities, we haven't seen that it's an issue, but it hasn't sort of come up high as one of the biggest things that stops people from becoming agents or something that makes them concerned about. But I think that it is an issue certainly worth investigating. Thank you.
Yeah, the second question was about the Aadhaar transaction being sufficient in terms of the transaction size. I think this was asked by Urmi.
Yes.
So basically, the answer to that is, if we are talking about individual transactions of a customer withdrawing, currently it is at 10,000 rupees, and there are multiple transactions possible. In case of PSU Bank, it is 20,000 rupees. So it is sufficient. Where it is creating a problem is that, especially in the women BC that we have the topic today, we have about 10 million what is called self-help group SHGs, and almost 100 million women members under those self-help groups. Now, these groups currently are doing transactions where the self-help group group chief, which could be two signatures of a president, secretary, treasurer. These are they are withdrawing cash from the bank, which are in excess of 10,000 rupees. If we have to do so right now, NPCI has implemented a dual auth transaction for digitizing these financial services. And if we have to do a dual auth transaction for withdrawal for self-help group, and which is a very large market, almost as big a market as the current Aadhaar market, if you have to do that, the transaction size is far excess of 10,000 rupees, and you can't do that. So that is clearly a major issue. If we have to proliferate the self-help group digitization for disbursement of loans to self-help group members. So this is, to answer your question, yes, for in general, it is not a problem, but for self-help group, it is a problem.
We have a question for Dr. Debman. Nikita wants to know, can you elaborate more on the chat box for agents? Dr. Debman.
Yeah, thank you very much. So now, for one of the challenges that we see in terms of those who are taking the exam, I think it's becoming mandatory for at least some level of BC agents to be certified, especially the bank ones. So that's by law. And the challenge is, how do they pass these exams? And they are tough exams to pass. So what we did was we took the IIBF is the Institute for Banking. So they set the exam. So take the curriculum, and then put it into a ChatGPT sort of engine, which means that if you ask the chatbot, give me 10 sample questions on module 1 of this exam, it will give you sample questions. So you can interact with this chatbot as if you were chatting with somebody, and you can ask it any question to do with the exams, and it will provide you sample questions and explanations of the answers and everything. And the whole idea is to help BC agents who are training, to be able to, to at least prepare for their exam. But it also goes beyond that, because we have several sources in the chatbot. So if I ask it now, what transactions can a BC agent provide, it will give me all the transactions that the BC agent provide. If I said, can you tell me the local banks in the Bihar area that I can go to, it will provide it, because it's pulling from different sources. So what we are designing is a prototype at the moment, and I can, we can share a little bit more with you. We want to make it as a kind of a sort of a co-pilot or a support for the BC agent, and try and figure out where the authoritative areas where they can get information and support. And this technology, as we all know, ChatGPT has only become available in the last few months, and it's changing rapidly. So we believe that with technology, and it's changing, we have to see how we can apply new technologies to the challenges that we face now and that we've been facing. So yeah, happy to go one-on-one with you, but it is something that we want to push fairly aggressively. Thank you. Rosalind.
Sorry, I was muted. So
Yeah.
we have a question for Professor Gurav. So it's from Anusha. And the question is, from your experience, how do you see that demand side awareness creation can be achieved at scale? How can we achieve demand side awareness creation at scale? Professor Gurav.
Yes, I think that's a good question. I think there are a couple of issues, I think, mostly with around design and implementation. So as I said, like I think two things to achieve it at scale. One is the content of the training, and second is who is it targeted towards. Because there's a lot of variation in terms of the challenges. I mean, as people on the panel have been talking about, different individuals face different challenges. So you can either go with a training that is customized to specific groups like women, for example, or the elderly, or you can go with a module that is on average targeting citizens. I think we're still too early in this space to know how we can achieve it at scale. I think my question would also just be, how do you even design these trainings to begin with? Even if I were to implement this on a smaller scale, I don't think we need to we know that very well before we can actually think about scaling it. So I would almost say the opposite, which is the first problem we need to figure out is what is the right way of creating demand side awareness, even if it at a smaller scale. And once we understand what models work well, then we can think about how we want to really take it to scale.
Thank you. And then a final question. Final question here is from Professor Peter Corti, and I think this can go to Mr. Sunil and to both the other presenters here. Is there a code of conduct for agents under your umbrella? So, Mr. Sunil, is there a code of conduct for your federation? Asiwaja, is there a code of conduct for the agents within your portfolio? And Dr. Deban, is there a code of conduct you let your agents under your program sign on to? Yeah.
You're on mute, Mr.
Sunil
Sunil.
is muted. He's muted. Yeah.
Sorry. Yeah. So yeah, the answer is yes. There is a code of conduct for agents, and in fact, all the banks also put FAQs. In fact, some of the PSU bank do audit that whether the do's and don'ts are published at the BC agents outlet. Having said that, the question about overcharging and some of the things related to compliance is also from reporting. So unless a customer reports overcharging, you will not get to know. So, but what happens is, especially in the urban environment, you get to know any wrong practices, and we do take up the matter by issuing communication to the corporate BC under question. And if it does not improve, then we escalate it to the bank. Currently, legal enforcement from the federation is not possible because the enabling provisions don't exist. But I can tell you, just communicating to the corporate BC and escalation to the bank itself makes it reasonably accurate impact on the BC agent and the corporate BC under question. The federation currently is in the process of creating what is called a negative BC registry. So we will have BCs which are have done some wrong things. So there will be some of the people are saying that should not be called negative BC registry. You can say it as a suspect BC registry, so that the agents' practices are suspect, and that work is on so that at least when an agent shifts from one bank, sponsor bank to another sponsor bank, or one corporate VC to another corporate VC, we are pre-warning by providing this information in Federation's website that this is a suspect BC registry. And also, this would be a negative covenant for the agent under question, and he does not want his PAN card and name to be there on the website. So these are some of the methods. And lastly, the regulator has issued a self-regulatory organization SRO guideline, and that SRO guideline is for fintech. As you know, most of the corporate BCs are fintech. So the BCFI the Federation would be seeking recognition from regulator for SRO. BCFI is working right now as a deemed SRO for the last 3 years, but without a legal recognition from the regulator. So therefore, we are not able to do any legal enforcement. But if we get the recognition from the regulator, lot of code of conduct which is there on our portal, which we are enforcing through communication to BC agent and banks, would also get the legal teeth due to SRO recognition. Thank you.
Very interesting comments from you on the agent registry. I think we've seen different models around the globe, and interesting pointing out how the backing or not backing of the regulator can affect the legality of the register. Very interesting. Dr. Deban and Asiwaja.
Maybe Swai, do you want to go first?
Asiwaja.
Okay.
Okay.
Yes.
Dr.
Okay.
Deban.
Okay,
Okay,
no,
Asiwaja will go there.
Yeah,
No,
please.
is it Aishwarya or the other one? I think we can decide.
No,
Durban,
ladies
please
first.
go.
You can go first.
Please go ahead.
You can go. Okay, fine. Okay, I'll go ahead. Okay, so I think for us, we work very closely with FIA Global as one of our partners. We work with Sunil also very closely. So in terms of the umbrella and the code of conduct, we work through them. And as Sunil has explained how the system works, I mean, we are good with that. And that's why I wanted FIA Global to go first, because we work with them. It's their agents that we are training. But I just wanted to touch very quickly, if I may. There was one question about certification and structure. And I must say that one of the things that have been touched about the India work is the structure that they have put in place. So I've been involved with agent work in Africa, especially, and also in Ghana, set up agent networks there. And we don't have that structure. You know, it's every organization trying to do their own thing. We tried agent registry. I don't know whether it's still done. You know, and I think what inspires me about what India has done is the structure they have put in place. And though I'm not one for people just to get certificates just for the fun of it, the certification process that they've put in place, for me, does help, because being a BC is not, you know, we don't want it to be like just a side job. It's an important service that the person is providing. You know, it's core to our financial inclusion objectives, last mile delivery. So you want people who are dedicated, people who feel responsible for the job that they are doing. So for me, if we can get them properly certified, and then that process can help in onboarding, strengthen the network so that delivery can become better. Then this whole idea of code of practice and everything sort of falls under that, because there is a structure in place. Now, without that structure, it's very difficult to get codes of practice, or even to get an organization such as BCFI in place to make sure that the system runs. So to me, that's one thing that I just wanted to say that has encouraged me with the India model, and hopefully some of the learnings that we see from there can be applied in other countries. Thank you.
Great. Asiwaya?
Yeah, I think I agree with Durban. At the same time, I want to add that overcharging customers, the do's and don'ts that Mr. Kulkarni has pointed out, these are things that have to be communicated and enforced, which is something it has to be done on in multiple ways, and a very robust risk and compliance team. Uh, Coupled with field auditors, because see, these are things that happen, and keeping them in check and trying to understand how these can be circumvented is something that we should really be speaking about more often. And but yes, circulars are sent even from banks, giving us a heads up as to, you know, these are things that are happening in this particular region, or, you know, please be more vigilant about the way your BCs are functioning. And so communication is happening on multiple levels. And like even Mr. Kulkarni rightly pointed out about the bank's communication, I think that it's really an ongoing process. It's not something that is done once and then we can look the other way. It is really a more ongoing, seamless process that has to happen. And code of conduct, of course, is very much in place when we give out a onboarding letter to agents. It's mentioned in multiple languages, even in such letters, so that they themselves can internalize these points.
I think we've had a very insightful conversation. If there are any, we don't have any hands on here, but it's been very insightful. And I think the most important thing is that for our participants, especially those from the research community, you've been exposed to a lot of pain points or questions you can use for your research, or you can delve deeper in your research. So before we close, we'd like to do a final poll. So can we have the screen up? Good. So we've heard so much in these presentations. We've heard from academia who have gone to the field to conduct research, and we've heard from those who work on the field, who manage agents on the field. And we want to know from you, based on these discussions, what type of intervention is key to improve quality of agent networks at the last mile. So in one or two words, what do you think are the interventions we need to improve the quality of agent networks at the last mile? So as usual, go into the chat and get the link or scan. So we have security. Security is coming up strongly to improve quality of agent networks at the last mile. Okay. Any other trainings? Good. Can we have more responses coming in? Certification. Regulatory oversight. Good. Policy support. Security is still high. Business viability. Okay. Security is still up there. Okay, let's have at least 30 responses. So a lot of you think security is a key issue. Mr. Sunil, something for you to chew on in your federation: security, network enhancements, continuous monitoring, regulatory oversight, policy support. Security is still there. Good. Okay, let's get it up to 20 soon. Good. Good. Incentives. Okay, security has whistled out. We now have incentive. There should be business case for the agents. I guess as Iwa just pointed out, if there's a business case, there will be no fraud. So better incentive. Certification is still there. So the issue about monitoring and quality control. Good. Training comes up stronger. Okay, it looks like incentive is going down a bit for certification. Good. So certification again here, either from the federation or from the regulator. Yes. Good. Incentive is quite strong because we see incentivizing agents again, better services, onboarding process. So good. All right. Great, we have hit at least 20 responses. And out of the 20 responses, I think what comes so strongly as the key intervention to improve quality of agent networks at the last mile, we're looking at incentive, certification, I think network connectivity, and regulatory oversight, which we can say can be linked to incentive certification in a way. Any more before we invite Professor Peter Cote to give us the closing remarks? I was supposed to do that, but since you've heard my voice all through, I think you should be bored with my voice now. So I invite our Executive Director, Professor Kwoti, to give us the closing remarks. And we hope to see more applications from researchers in India. Good.
Thank you very much.
So,
Ades,
Professor
and
Peter
thank you.
Kwoti.
Yes, Ades, thank you very much for moderating this. And Yumi, apologies for the technical challenge you faced, but I think we're happy you still could join and hear us. So let me take this opportunity to thank the panel members. You've been excellent panel. The discussion and the presentations have been very insightful. We are so grateful. I wish to thank the organizers as well as all the participants that were able to join us. I want to use the opportunity to also encourage all of you interested in reaching the last mile to put in application, and also for institutions, all of you that are represented here. We want to strengthen our collaboration. We want to keep in touch. So let's deepen our collaboration. Let's deepen our research in this area so we can improve on the quality of agents, network, and services. I wish you the very best of everything. Let's keep in touch. Thank you very much.